Welcome back everyone to the Audacious Witch channel where we talk about the magic behind the stock market. If you have been watching my shorts, you'd know that I recently bought a stock called the Trade Desk for the first time. What you don't know is that I sold my Google stock at $202 in order to fund this new stock buy. As I have reasons to believe that the Trade Desk is in the process of potentially disrupting Google, the ad tech giant, I have been keeping my eye on this cloud-based ad tech company for a while, as I am a shareholder of Roku. Roku is one of the Trade Desk's many world-class partners. In this video, I will give you 4 reasons why Trade Desk will be a huge winner for us even if they don't disrupt Google or Meta. I can see a path that the Trade Desk could be joining the $1 trillion boys club. Here are my reasons and why I am currently buying TTD stock right now. Warren Buffett said, "Be greedy when others are fearful." TTD stock dropped by 35% since the earnings or the equivalent $20 billion of its market cap erased. This was the very first time in 33 quarters since the company went public that the Trade Desk had missed its own guidance. This is why the stock is being dumped by Wall Street right now. Why I have reasons to believe this is just a temporary bump in the road. I waited patiently when the stock went to its 52 weeks high at $141 per share. I thought and I kept telling myself that the opportunity will present itself for me to get into this giant slaying story.
Look, I think that we all know that Google is the king of advertising, both getting ads but also rating ads. How can you, a little company, Jeff, take Google on? Because that's what you're really doing.
Yeah, so we are taking on Google. I wouldn't call them the king. I think that's still, I think the throne is still up for grabs.
Okay.
But the reason why they've done so well is because they've monetized Google.com and YouTube.com really well. We think that advertising is less about navigation like Google.com and more about winning hearts and minds across a very competitive media landscape, which has hundreds, thousands of different properties, websites, apps in it. And so we just want to make certain that we're objectively deciding which ads an advertiser should use. And our objectivity is something that Google doesn't have because they're trying to monetize their site.
Of disrupting hyperscalers, so I instinctively pulled the trigger and pressed buy at $80 per share. After listening to the conference call and read their 10K presentation and strategized a plan to invest into the Trade Desk for the rest of the year as long as the stock is heading down, which I will get into the technical levels later in this video. After introducing you to the Trade Desk story. So what is the Trade Desk? Basically, it's the super cool ad buying platform in the cloud where brands can create bomb digital ad campaigns that are like totally data driven. You can plan, manage, and tweak everything to be perfect. It lets you run ads across all sorts of formats and channels. Think Netflix, Roku, Spotify, and Walt Disney's Hulu and Disney Plus, including videos, which include connected television, plus it works on all of your devices, phones, laptops, TVs, you name it. They've got connections with all the big players, major inventory, publishers, and data partners provide ad buyers reach and decisioning capabilities and gives you the tools to make smart choices. Investing is about investing in people and their vision. Just like Tesla's founder Elon Musk is a visionary, the Trade Desk's founder and CEO Jeff Green is someone who's clearly passionate about his industry. If you want a masterclass in ad tech, just listen to Olive Green's earnings call. He always takes the time to share new insights, trends, and fundamentals of the industry. I wish all CEOs would share so much wisdom and insight.
So programmatic is just a fancy word to explain the difference between data-driven and guessing. We used to do guessing for most of advertising, and today we're being data-driven.
I feel like he is a straight shooter. He's not a man who sugarcoats things. The Trade Desk has always exceeded expectations, and Jeff Green nailed so many predictions that I found risky to share. When Google came out saying it would stop third-party cookies, Jeff Green said they would never be able to do that within the time frame they wanted. I found that a very bold and risky prediction. I mean, this is Google, right? However, at this point, Google is not run by founders. Jeff Green was right. Not only was the date postponed multiple times, in the end, Google's third-party cookies were not stopped. And by the way, Green made another Google prediction this quarter. Here it is. We are preparing for a world where Google exits the open internet. I'm confident that one way or another, Google will exit the open internet. I think they should. Most of their antitrust and regulatory problems come from draconian ways they have engaged with the open internet in the past. If and when Google exits the open internet, they will leave a big hole and a big opportunity for the rest of us. This is the first reason why Trade Desk will be a huge winner. Google is over $2 trillion company. If the Trade Desk captures half of that, we are looking at over 10x opportunity from here. Let's see if this is another correct prediction. I could give many other examples from the past where Green made these bold predictions. And each time he was right. Even if the most bearish thing happens, buying a dip like this will be a money-making move simply because people have panic sold. I have clips to prove that. Here is a clip where Josh Brown feeling good and buying the stock when the stock was over $100 a share.
What's happening now is that ad sales are increasingly leaving those walled gardens and going to places like connected television now that the TV isn't so dumb anymore. The television now knows as much about the person watching it as the computer and the mobile phone. The Trade Desk sits right in the middle of this huge secular trend. So the way I think about the Trade Desk is they have basically built this platform outside of the walled gardens of Meta and Alphabet, and advertisers are increasingly choosing to programmatically buy ads on this platform. They're using AI. It's very cutting edge stuff. They're being very smart about who they're displaying what to, what actions they want to see taken, etc. Netflix is utilizing the Trade Desk and a lot of other video platforms. So it's a volatile stock. It's high tech. It's high data. This is what I am personally buying today.
And here he is, completely panic sold. It all around $80 a share.
Here's the problem. You're buying a momentum name, and you've got a huge rally in the stock, so everyone's already up in the name. And then they come in and they have nothing positive to say. There's no valuation support. It was already a nosebleed high momentum name with a crazy valuation. So when they miss, you can't wait. You have to come out of the name and reassess. So this was a really easy sale to make, and I don't think I revisit it anytime soon.
There are people buying stocks at all-time highs left, right, and they are buying it just because the sucker keeps going up. I bet there are newbies that are buying Palantir stock right now at $120 a share. Simply because the sucker just keeps going higher. Well, I can tell you the Trade Desk stock has more bang for your dollar than Palantir stock at this current price. And it has the financials to back it up. In Q4, the Trade Desk revenue grew 22.3% year over year to $741 million, but it's a miss of $18.55 million versus the consensus. More importantly, the Trade Desk also missed its own guidance of at least $756 million, and the non-GAAP EPS came in at 59 cents, beating the estimates by 2 cents. This shows that Trade Desk has leveraging power, even with the revenue miss. The company can squeeze out more earnings. On a GAAP basis, EPS came in at 36 cents, up 81.5% year over year. The company also issued another $1 billion for the stock repurchase plan. With the company's extremely strong financial position, this is a no problem at all. It has $1.9 billion in cash and short-term investments, and with the free cash flow, we end up at $2.1 billion in the most recent quarter. The Trade Desk has no debt, For the 11th consecutive year, the trade desk saw more than 95% customer retention. This is the second reason why I see TTD stock a huge winner. They have a perfect balance sheet and superb income statement with high margins, which shows wide moat potential. Why am I so confident that this will be a great turnaround story after this 30% stock crash? The CEO said, "What falling short of our own expectations does not represent." This didn't happen because the opportunity isn't as big as we thought. In this case, it isn't because of competition either. It's essential that Green emphasizes that this is not about competitive threat. It's not because of Amazon or AppLovin. Jeff Green denies this, and I believe him because it makes sense. Why would Amazon suddenly become a stronger competitor? Well, it has been into this space for years already. Jeff said Amazon can't be trusted. The only competitors we encounter today have the worst objectivity problems. Amazon is asking advertisers, big and small, for their advertising budgets. Meanwhile, Amazon competes with most of the Fortune 500 companies in some way. Whether we are talking about Microsoft in cloud or Procter & Gamble in CPG products or UPS or Nike or all the rest. Jeff Green has been saying this for years. Google and Meta get to grade their own homework. In other words, there's no certainty that the numbers they give you as an advertiser are 100% correct. And indeed, Amazon competes with many brands. The trade desk is an independent player that can be trusted and was focused on being one from the start. The real reason for this 30% crash is due to a series of small execution missteps while simultaneously preparing for the future. There were a few instances where the company could have chosen for short-term performance but chose for long-term opportunities. There may have been the implication that the trade desk could have met its guidance if it wanted, but it didn't do this because they didn't want to sacrifice long-term goals for short-term gains. In short, the reason for this buying opportunity is literally the executive team's long-term thinking and focus. They did the opposite from accepting instant gratification. They are improving their business and focus on the long term, which is really a powerful reason for this stock to become a huge winner for us in the future. The last reason for this business to be worth over $1 trillion is because the TAM is so huge. Advertisers are becoming more strategic and data-driven in their media buying decisions, which is a positive for the trade desk. The company also only controls $12 billion USD of ad spending in roughly a $1 trillion USD market. Digital media, X search, and social is roughly $135 billion USD, though which are more obtainable markets for the trade desk. Cord cutting is a massive secular trend that is happening. The trade desk will be the best way to play it.
Well, because cord cutting is a powerful long-term theme. And that's what we call a secular trend, okay? There's cyclical and there's secular, meaning it doesn't need the economy to do well.
If nothing else, there is still a large opportunity internationally, as roughly 88% of the company's revenue comes from North America. Green also talked connected TV being the kingpin of the open internet. The reason is that nearly 100% of viewers are logged in, he even claims. CTV should be the first place all brand advertisers spend, not walled gardens like Google and Meta. That's a bold statement, but it makes sense. If you advertise on Google or Meta's apps, you can only see the numbers that they give you.
Some other media buying platforms benefit when you spend your ad budget within their walls on the streaming content and search platforms they own. We never steer you toward our channels or inventory because we don't own any. This allows us to prioritize the right ads for you, wherever they are, and be transparent about how your campaigns are performing and if they're driving business outcomes. No hidden agendas, no conflicts of interest. Your brand's success depends on seeing the big picture. That's why it's so important to have an unbiased, trusted partner. one that can help you find new opportunities, expand your reach, and maximize the value of data-driven advertising.
When people are all logged into CTV, the measurability of ads is so much better and more accurate. The next support level is at $76, and this is when I will be buying some more. There is so much more to this trade desk story. This video alone can't possibly cover them all. If you want to learn more about the trade desk, hit the like button. If I can get over 20 likes on this video, I will make another one and go even deeper, because today I am just scratching the surface. Are you ready for the open internet?